the irony is that the lower Dixie goes, the stronger the system gets. And people are like, what? That makes no sense. It's like, no, it actually makes perfect sense. Again, when you think about it, it's counterintuitive, but it makes sense. And the reason why is because Japan is such an interesting country because they've really been at this forefront of figuring out how to keep an economy running when you're at 260% debt to GDP. And the problem with pinning interest rates at the zero bound for 30 years is that Bitcoin can become the new global reserve currency, and then that is used to settle international trade, and then that international trade, basically builds up Bitcoin balances between nations, and then those nations can use it if they want to actually use as money, even internally within their borders. That's how you actually finally kill the dollar system.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Peruvian Bull is a Peruvian-American scholar, researcher, and educator hailing from the Pacific Northwest. He's been blowing up X with his bomb threads on the US dollar endgame, Japan, and gold. Peruvian Bull, welcome back to the Bitcoin Matrix podcast. How are you?
I'm doing great. Just still catching up on jet lag from my trip to Tokyo, but otherwise doing amazing. And thanks again for having me on.
Yeah, man, I love it. This is going to be awesome. So let's go right into Tokyo and Japan. Like, what were you doing in Tokyo?
So I was filming a documentary about the Japanese yen and the Japanese economy, and it was luckily sponsored by MetaPlanet. So the goal of the doc was to really do a history and deep dive into the Japanese, macroeconomic and financial situation from, like, let's say the mid 80s all the way up until now. And then obviously end it with, a twist of hope for all the financial repression and economic stagnation that they've had. And so, we'll include a little bit about Bitcoin at the end of the doc, but really it's like a 80%, 90% just Japanese yen, Japanese economy documentary that I think it's hopefully going to come out in a few months, but I think it's going to be a really good one, a banger.
Let's just start with Japan then. I mean, it seems like you learned a lot just even in your time there. Because I think you went in knowing a lot about Japan, maybe, but so I think there's a lot to uncover here. Maybe start with like the carry trade.
Sure. And so to understand Japan, again, you have to think in completely different terms than most Westerners are used to, right? Like the traditional macroeconomic models just do not work there. And Japan has been kind of like the playground for monetary experimentalism for the last 30 years. They had a massive real estate and equity bubble in the mid 80s that basically blew up in spectacular fashion in 1990. And then there was a slow rolling, essentially depression throughout the 1990s, which caused mass unemployment, mass suicides, mass depression, even bank runs in the late 90s at certain junctures, and the media obviously being very, very nationalistic and protective of the government, and the banks in general refused to cover that. And the Central Bank of Japan responded to all this chaos at home by essentially refusing to take the bitter medicine of deflation and lowering interest rates to zero, essentially freezing stock and bond market prices where they were after deflating for a decade, and then basically engaging in, sophisticated financial repression. So first, pinning interest rates at the zero bound, and then moving that out across the yield curve, eventually with yield curve control. And then they also were the first to do QE in March of 2001. They continued that through 2006, and then obviously had to do another wave of QE in the wake of the great financial crisis in around 2010. And then they invented something called QQE, which was, QE on steroids with equity buying, corporate bond ETF buying, obviously Treasury and government bond buying. So they've really been at this forefront of figuring out how to keep an economy running when you're at 260% debt to GDP. And the problem with pinning interest rates at the zero bound for 30 years is that there are these traders who obviously want to arbitrage, the difference in interest rates between countries. And if you're pinning interest rates at zero, you're essentially telling all these traders, hey, you have a source of free money. You have a free funding leg that you can use to invest in other assets. So you can go and borrow yen, sell the yen, right? Borrow them at 0%, sell them, convert them into US dollars, and then buy US treasuries or buy US equities or buy corporate bonds or whatever it is. And then you can profit basically that spread for as much and as long as you want. And you can lever that up to juice up your returns. And that carry trade, which had been building in the yen for the last 20, 30 years, has really gone into overdrive in the last 4 or 5 years during COVID, as the Fed raised interest rates in the wake of the great inflation wave that came due to the COVID-19 spending stimulus packages. And that carry trade blew out the currency from $100 yen to the dollar to 150, and it prompted the BOJ to do all these emergency interventions as well as bond buying operations. And so this whole I guess fiat experiment has been crazy interesting to watch, and to go there in person and to see how the financial system actually works, and to talk to people who worked at Goldman or worked at Jefferies or worked in investment banking or worked in import export during the 80s and 90s is just a fascinating experience. And so I'm really excited for the doc, and it should be out in about 2 months, like I said, on the Get Based YouTube channel, and I'll also put out a YouTube video with my own take on things in the coming weeks.
So what did you maybe make of your time in the country? Did the economy seem like they were prospering? What were maybe some of the cultural observations you made?
Sure. So Japan is such an interesting country because on one hand, you're right. They have 260% debt to GDP. They don't have this immediate crisis that seems to be looming over the people's head. It seems like everyone is just kind of getting by as well as they can, but it's partially due to the cultural resilience and just the, I guess you could call it like ethnic strength of the Japanese, right? Their social bonds as a nation and as a people are so strong that they band together and they work together to get through basically anything. If you leave your wallet on the subway in Japan, people will chase you down to give it back to you. And there are bikes everywhere that are unlocked. People leave, they might leave their laptop out at the library for an hour or two and leave and come back and it'll still be there. Like, this is an extremely high trust society, and it's also a society that prizes the collective benefit of the people. And so the government is also reflective of that. The government tries to do policies that benefit the people. But the problem is obviously, with their extremely rigid society in some ways, it makes them very inflexible to change, and makes them very, very hard, especially for the corporations, to envision switching strategies to, let's say, incorporate Bitcoin or incorporate AI or incorporate any new technology that would be maybe advantageous to them. So, their cultural strength is a feature, and it's a positive and a negative in different ways. And one of the main things that relates to is like I said, their corporate and I guess economic activity.
What about maybe in terms of upward and downward mobility? Can someone get a raise? Can they lose their job?
So that's really interesting. Actually, they can't really. So that was something that really shocked me to understand, is that the way the Japanese economy works is you go to school, right? You go to higher education, and then when you get out of college, you go get a job, and the job that you get is kind of dependent on your degree, your connections, and then once you get into the job, it's expected of you to just do what the job requires, nothing more, nothing less. You're not supposed to give ideas to your superior, and you're not supposed to come up with new business ventures for your company that you work for. And you're essentially just told to stay put and work, and there'll be scheduled raises when people above you retire or pass away. And so there is no real upward mobility in the sense that we think of it. And people just don't quit their jobs. And it's also extremely hard for businesses to fire people. So what that essentially means is that, again, the entire economy becomes frozen in time. Just like we said with the monetary system being frozen from the 1990s, their economic and I guess corporate system is also frozen in time. And so there's no change, but also obviously there's no growth because of that. They essentially don't really have a venture capital environment. They don't have private equity. They don't have angel investors. If you're an individual and let's say you run a couple of restaurants, and you have a few $1,000,000 and you want to invest in a software startup or invest in a Bitcoin mining company that's small and wants to expand operations, there's not really a structure to do that in Japan. It's extremely difficult. Anyone in Japan who's highly creative just moves to the US and works in Silicon Valley.
Okay. You posted most genius monetary policy ever invented, and it was like a meme. It was like a software drink machine. You got print yen, buy yen, and Bank of Japan. What does this mean?
Yeah, so that's referring to the meme where the guy is going up to the soda dispenser and he's pressing two buttons at once, and it's like print yen, buy yen, and the hand is the Bank of Japan. That's an example of what I was saying, like this nonsensical monetary policy, right? And essentially all monetary policy is in the end nonsensical, right? Because what they're trying to do is keep a broken and failing system upright, and they're willing to sacrifice people's wealth or sacrifice their purchasing power in order to do that. But the BOJ is especially nonsensical because when they were starting to do their yen interventions in the fall of 2022, in September and October, as the yen reached 150 to the dollar, they were at the same time still running yield curve control, and they were running basically their QQE program from 2013. So the Bank of Japan in a single week would go out and they'd buy, let's say a couple trillion yen worth of JGBs, a couple trillion yen worth of equities, and then they would, at the end of the week, fire sell a bunch of dollars into the market to buy yen on the foreign exchange to strengthen their currency. So at the same time that they were printing currency with one hand, they were burning USD to buy that same currency with the other on the foreign exchange markets, because they were finally seeing the effects of their insane monetary policy playing out with the advent of the of the intervention and the breaking of the 150 handle. So in order to balance the two, I guess, impossible levers, they were trying to do both at once, which just meant they were burning the candle at both ends. They're printing money and then buying back that same money they printed with dollars. And that obviously that strategy will not work forever. And once they run out of US dollars, then a serious crisis will be on hand. But I don't think their goal, and I think they understand that they're eventually doomed. So I don't think their goal is to necessarily, run this thing, run their dollar reserves all the way down to zero. I think they are just trying to delay the inevitable. And the inevitable is just a blowout of JPY and eventual inflation coming back to Japan.
So like maybe along those lines, I mean, what kind of dollar reserves do they have left compared to when they were kind of shooting through that ammo? And at what US dollar JPY price do you think the music stops?
Sure. So that's a great question. They started off with like 1.4 trillion in US Treasuries, and they burned through, 250 billion of it. Luckily, they quickly realized that this strategy, so they still right now have about 1.1 trillion of US Treasuries, if you look at their tick data. Luckily, they realized that was a bad strategy, and they realized that they would quickly run out of dollar reserves. It would like literally last them 18 months at the current burn rate they were doing of like 60 billion a month. And so they quickly realized that was not sustainable, and so they said, well, we have to do something else. And so in December of 2023, they first started with moving the bands of yield curve control up into the positive territory. So the band went from 0% essentially to 0.5%, and then they eventually moved the band to 1%. And then they eventually stopped doing yield curve control altogether, and then they started hiking out of nowhere when the rest of the globe is starting to cut. And what they're trying to do is something called monetary policy volatility. And no, I'm not making that up. It's essentially they're trying to change. They've been having the same monetary policy for 34 years, which is low interest rates and QE infinity. And that has entrenched the players in the markets with all their positions and all their leverage and all their ideology and thinking about markets. And so to change things up, to shake everyone up, they're now doing the opposite of what they did before and doing it randomly and not announcing it, right? they'll do an emergency rate hike, and then they'll hit the market with a yen intervention, or there'll be an FOMC meeting, and 3 hours after the meeting, they slam the market with $30 billion of yen buying. And again, it's the whole goal of it is to just freak everyone out and to make people think, oh, well, maybe we shouldn't put on these yen short positions because, we might get blown out of the water. And so, again, that volatility is kind of like its own strategy in a sense of, scaring traders, stopping them from putting on a yen carry trade, and hopefully, in their eyes, restabilizing the monetary system. But it's coming at a price because, the 10-year JGB is now above 1.5%. The 40-year, they have a 40-year bond, if you can believe it, and the 40-year bond is now at the highest it's ever been since its issuance in 2007, like in terms of yield. And their entire bond market, obviously is the yield curve is blowing out, and the Japanese government cannot afford those kinds of rates. And so eventually they'll be forced to make a decision if they want to keep the rates where they are and refinance at 1 or 2%, which again, that's a lot when you're talking about 260% public debt to GDP. Or if they want to do QE again and yield curve control again and bring the rates down to zero, which just means their currency is going to blow out even more.
Wow. I love the volatility as stability policy. That's always a good one. 40-year bonds, that makes me think, though, about like, you're saying monetary experimentalism, like, are we getting 40-year mortgages soon and 50 to 100-year bonds in America? I wonder, and maybe we'll talk about America soon, but how much of the economy or the stock market, the Japanese stock market, does the Bank of Japan own?
So the BOJ owns about, I think, 58% of all JGBs, which are the government bonds. They own over 75% of the 10-year JGBs. And they own about, there are certain tenors where they own more than 100%. And the reason why they can do that is because they literally buy all the securities from an issuance, and then they lend those out. So technically their ownership over certain issuances of the JGB is somewhere north of 100%, like 107%. For stocks, the number's a bit lower. I believe it's around 45%, but it's still huge. And the BOJ itself has been trying to juice the markets, and after the Nikkei reclaimed its 1990 high in April of 2024, the BOJ was publicly speculating if they could go out and start selling their massive equity holdings, and obviously they can't. Like that's a joke. If they own almost half the market, you can't go out and sell in any size that matters because you're just going to drive the market back down because you are essentially the market at this point. And so the BOJ is kind of trapped in this conundrum where they're going to have to continually zombify more and more of markets until they basically own everything in a real sense, both in the equities and the bond side.
Speaking of zombie companies, maybe the opposite. What maybe did you see as the reaction to MetaPlanet in Japan?
Yeah, MetaPlanet. So they were extremely, vivacious and energetic and excited. Japanese companies, again, remember, this is an environment where the stock market has gone nowhere for 30 years. You literally would have, if you parked cash at the Nikkei at 38,330, their last tick in December 1989, and you held it, you would have made no money in either in real terms or nominal terms for 34 years. And so 34 years and like 4 months. And so MetaPlanet buying Bitcoin and then having their stock skyrocket over 10,000% brought...
Hey Bitcoiners, I'm heading to Bitcoin 2025 in Las Vegas from May 27th to May 29th, and you need to be there. This isn't just another conference, it's the ultimate Bitcoin party. Grab your ticket now using promo code MATRIX or at the link in the description. See you in Vegas, freaks. Let's make this one legendary.
Volatility brought energy back into the Japanese stock market, and Japanese have actually formed, essentially like Reddit subreddits and message boards that all discuss the MetaPlanet stock. Just like the MicroStrategy guys have their own, subreddit, and they have their own Twitter community, which is irresponsibly long MSTR. There's the same that's developed for MetaPlanet. And I went to the meeting, and there was about 2,000 people in attendance. Typically, last year in April 2024, they had 5 people in attendance. So their shareholder base has essentially grown exponentially, and people were coming with swag. People were coming with hats, with shirts, with jackets, with Bitcoin books they wanted signed. And Dylan LeClaire and Simon Jarovich, I think is his last name, they signed books and papers and took pictures with people for like 4 hours after the thing had ended. So it was like a massive, massive event, and they even had an overflow room. So it's the biggest shareholder event that has essentially happened for their company's history for sure, and I think even in Japanese equity history, because again, most Japanese equities are completely dead. They don't move anywhere. They don't really trade. No one really buys them or holds them. Maybe some pension funds, and that's it. And so there's no retail investor base that's excited about any of these stocks, and MetaPlanet's the first one that is doing something that they can get excited about.
That's pretty cool. I did not expect that response. I expected a very tepid sort of like, oh, no one in Japan really knows about them, and they're a tiny. That's really interesting. So then, speaking of sort of maybe Japanese equities and haven't moved very much. My son is a gamer. He codes, he makes games, he loves games. He's expert gamer player thing. And, it's made me interested in GameStop because it's like a way we can kind of connect communities. GameStop's interesting because it's another maybe Bitcoin treasury company. And I think just Bitcoin treasury companies are interesting, right? So I think GameStop is kind of like a little different because it's maybe bigger if they make this move, and they haven't officially yet, other than maybe changing their guidelines and their policy. They would be one of the bigger or biggest companies to move into the treasury space. But I think about GameStop, and I think about you being in Japan, I think about Nintendo. So maybe what did you maybe see there with GameStop and or Nintendo, and sort of what's going on with Bitcoin?
Sure. So actually, I've been in the GameStop community, like for almost 5 years now, and that's actually where I got my start writing macro research on some of the GameStop Wall Street, Reddit kind of boards, and that community has been obviously slandered. They've been lied about, manipulated, fudded out of existence by the mainstream media for the last 30 years, really retail investors have been for the last 30 years, but them specifically for the last 3 years, very hardcore, propaganda campaign against them. And I never understood it because, again, if you look at GameStop, at the time before Ryan Cohen took charge of the company, it was a brick and mortar that was seeing, decreasing year-over-year revenues, they had negative earnings for the last 10 years. They had a $400 million bond that was coming up in March of 2021 that they could not pay. They only had like $78 million of cash on hand to pay it. And they were, ostensibly and also really a company that was looking towards, it was heading towards bankruptcy, and it was in serious trouble. But then you have Ryan Cohen come in, buy 12% of the company, put in fresh capital, put in fresh leadership, then start reinventing, the company, retooling all the stores and getting rid of dead waste and lowering SG&A expense by like 40% so that their margins improved. And for the last 2 quarters, it's been cash flow positive on a free cash flow basis. And so they've finally, and they are also debt free. So they've paid off all their debt. And now they're sitting on $4.7 billion of cash with another $1.3 billion loaded from the convert. So they're essentially a cash company that's basically ready for any dip to buy a massive amount of whatever they want. And what I've been proposing, since 2021 really was that GameStop buy Bitcoin, because Bitcoin was the ultimate hedge for monetary collapse or monetary issues. And GameStop represents this kind of groundswell, grassroots, retail investor, power to the people movement that was an echo of the 2008, or I should say 2010, 2011, Occupy Wall Street movement. And so if you if you see the corruption in the stock market, you see this naked shorting, you see these hedge funds manipulating equities and using wash trades and ladder trading to push down stocks and then paying mainstream media to put out negative articles, and you are angry against that corruption, it's very easy for you to see the synergy with Bitcoin and how Bitcoin fixes not only obviously the corruption in our monetary system, but it could help fix the problem with our stock market. And so I've said for years that they should get in. And in last summer in July, we wrote a shareholder proposal to the board recommending that GameStop buy Bitcoin with what we said was 20% of their cash on hand. Now, they don't seem to have actually done that with the cash on hand yet, but clearly Ryan Cohen has been orange pilled by Saylor. They had a meeting in late January, I believe, and put out a tweet of it on like the 29th with both of them together. And then Ryan Cohen, obviously put out some news around right after earnings saying that the company was considering a Bitcoin treasury strategy and that they were loading this convertible bond in order to do it. And so with that news and that bond now funded, it's exciting to see what's going to come next, because I think the synergy for this company is massive. And not only that, you can see the combination, right, of these are the two largest, like, strong, opinionated investor bases in the world, essentially, right? You have the GameStop apes who have been, again, manipulated, slandered, lied about from the mainstream media. They're pissed off at the establishment. And then you have the Bitcoiners who basically have had the same thing happen to them. And both of them have learned to live through immensely volatile cycles and, immense drawdowns. And so if they can combine, and if Bitcoin can adopt or if GameStop can adopt Bitcoin in a meaningful way and then incorporate it into their business model and also hold it on their balance sheet as a treasury asset, we could see, a huge spike in the GameStop price, but also we could see obviously more base level adoption for Bitcoin.
I would love for you to kind of walk us through, the GameStop apes have, I guess, been through a lot. And maybe even Michael Burry was looking to ape in at some point. And maybe what did he discover about sort of like shares and like sort of like naked shorting or whatever you call it? What's going on over there? I mean, it seems kind of weird.
It's insane. And, Burry was obviously one of the early ones to point this out. But like we said, there were multiple other people who were buying shares and trying to DRS them and didn't find it, an easy task to do. But Burry started buying GameStop in like March of 2019, right before obviously there's like a year before the COVID pandemic, and GameStop was essentially kind of a faltering brick and mortar that was, again, dealing with these debt problems and this cash flow problem that was bleeding them dry. And he bought, I think it was several million shares back when the float was like 78 million. So he bought a significant amount, and then he tried to pull them from his broker and put them in what's known as a DRS account, a direct register share system account. And to do that, he has to use a transfer agent, which pulls the shares from the broker. And when he did that, they call the broker, and the broker tells him that they can't deliver the shares because they don't have them. And the broker says, we're going to have to, spend a couple days at first to go find you the shares. And a couple days pass, and then a week, and he keeps writing letters to them. They keep saying, we're working on delivering your 1.4 million shares. They deliver a couple 100,000. He says that's not enough. They keep delaying. And in the end, it takes him months to get all of the shares accounted for. And it was just small. Obviously, this is just a small amount of the float. And the question arose for him, obviously, is, well, if the broker doesn't have the shares, then where are they and who has them? And this opened the can of worms of basically what is called naked shorting, or grossly negligent or grossly abusive naked shorting, which is a practice by which brokers, market makers, hedge funds can promise to sell shares of a company. They can deliver what's called a phantom share, basically kind of IOU. So essentially, just like you can counterfeit money, you can counterfeit shares. You can print fake shares and give them to someone and say, hey, Cedric, I don't have the GME share right now, but I'm giving you an IOU, and that's as good as a share, just like how your dollar is just as good as gold. And those phantom shares were circulating everywhere. And so when someone finally said, hey, I need to pull this back to my transfer agent and get real shares, that wasn't available. Like, that wasn't an option. They had to go out and find the real ones. And so GameStop has seen that abuse inflicted upon them basically incessantly for the last decade. And again, this was evident with the run-up in January of 2021. The short interest before the run-up was reported by FINRA on the low end at 140%. Now, how can you short a stock? How can you short the float more shares than exist, right? 140% of it was shorted. And other FINRA data from the month prior actually showed 221% and even 330%. So again, multiples of the float shorted, as if they owed more shares than exist. How do you do that? How are you able to short more shares than exist? You naked short. You create phantom shares. You create fake IOUs. And so no one really knows the true GME short interest figure. But whatever it was obviously grossly abusive to the company and was driving the stock price down and down and down and helping to drive the company into bankruptcy. So that's what Burry exposed. That's what Wall Street Bets and the Redditors and the GME apes exposed, is this massively abusive system that just drives companies to the dirt, and these hedge funds that profit from shorting those companies down.
Are options used to cover their positions in these?
Yeah, options and derivatives are a form of what's called like derivative hedging or FTD cycling. One of the things that the settlement system will ask for is, if you naked short, that you have what's called a bona fide agreement for a share, which basically means, do you either have a share or do you have a promise for a future share? And if you're a hedge fund and you don't have all those shares, then what you do is you go out and you buy a bunch of options, and then you claim those options as good as shares. But when the time comes to redeem the options, you just sell them and you roll them, and so you don't ever have to actually deliver the underlying shares. You can also do that obviously with swaps. Archegos. Part of the reason why Archegos Capital blew up in March of 2021 was because of GameStop. And the reason why we know that is because if you look at the legal documents, you can see disclosures where GameStop is mentioned in discussions between the head of trading at Archegos and the prime broker at Credit Suisse. And you can also see that obviously they have something called a net capital or net excess premium charge, which is basically like the charge that they owe to the DTCC for hedging all of their trades. And the higher this margin amount is, basically it means the more of their loan book or the more of their stock book is at risk. And if you look at their margin amount that was required, it essentially exactly follows the GameStop price action from January and February of 2021. And so with those two clues, it's clear that GME was part of these derivatives, these total return swaps, these portfolio and basket swaps that were used to short GameStop and give the shorters a way to go to a regulator and say, hey, yeah, we don't have the shares, but look, we have this derivative agreement that is a promise for future shares. So that's good as the shares themselves. So we don't need to give you actually the real shares at all.
Wow, that's crazy. Has this position been like fully unwound then?
We don't believe so. So the reason why is because, for one, Archegos went down trying to hold this position, and then Credit Suisse, literally a month after I got this position handed to them, they also collapsed and required a bailout from the Swiss National Bank, which is their central bank, and the local Swiss financial regulator. And they were acquired by UBS, and UBS has been obviously bleeding from this bag as well as the other toxic Credit Suisse bags from 2008. So all of it combined basically means that, it's our theory that they don't have all the swaps unwound, and those swaps are just being used to kick the can essentially as long as they can until they're forced to cover, which they do not want to, because of course it would result in many of these hedge funds blowing up.
It's like the scene in Big Short where he's learning about the derivatives market around the mortgages, and it's just like, whoa, there's 20x of this bullshit. How maybe is high speed trading predatory on retail, and is that involved in GameStop at all?
Oh, absolutely. So in the US, there's something called PFOF, which is payment for order flow. So retail brokerages and market makers can essentially work together to front run customers. So let's say I go to Robinhood and I want to buy Apple stock. I put in an order through Robinhood. Now, Robinhood is not actually, a market maker. They can't actually get me the shares, but they're a broker. So they're supposed to go to the market, talk to the market maker and use the market maker to settle a trade, and then they'll transfer the shares into my account. The market maker that they have designated to them is Citadel. And Citadel goes and they can, because they have payment for order flow, they can essentially snipe the orders before they hit the New York Stock Exchange and use their own, I guess you call it, order book to balance out the transaction. So like, let's say, again, I want to buy 10 Apple shares. Normally my order would go to the stock exchange. It would be listed as a buy, and then a market maker would look on the order book, would find my buy order, it would match it to another sell order, give me the best price possible, and then it would execute, right? But by using payment for order flow, that order is interrupted before it gets to the stock exchange by the market maker who is paying for the order flow. So it's, they get it a few tenths of a second before the exchange does. And that may not sound like a lot of time, but in the world of high frequency trading, that is an eternity, because we're talking about like picoseconds here, like millionths of a second. And so they find your order, they snipe it, they internalize it, they settle it, and then they send it back. So basically, it ensures that most retail orders, especially from Robinhood, for example, don't even reach the stock market at all. They just get internalized by a market maker like Robinhood. And Robinhood is able to make a few fractions of a penny off every single trade they do in that sense. And again, you do that a couple 100 million times a day. You do that trillions of times a month or whatever, and suddenly you're seeing like, massive revenue figures for Citadel and Virtu and all the other market making firms. And so it's basically like a cash grab. And I think it's extremely parasitic in general to our financial system to allow something like this to occur.
Yeah. So when GME and all that was going down, I mean, I felt like it was something very interesting from how it demonstrates how corrupt the system is. And I was like, oh, I don't have to spend a lot of time there. I get it. I'll just hang out with Bitcoin. I didn't foresee Bitcoin treasury companies so much at the time, even if MicroStrategy was out there, especially with maybe thinking about ETFs coming down the road. But I want to hear more about Ryan Cohen. So I don't know much about Roaring Kitty, and Ryan Cohen seems very savvy. I think he was the CEO and founder of Chewy. And, so he's this is not his first, dog and pony show. And but I don't know. And he's met with Saylor, but I don't know what he's thinking. But maybe how do you see GameStop maybe changing their business model to be a full-fledged Bitcoin company? And because maybe Ryan Cohen doesn't do exactly what Saylor does. They have different operating businesses, legacy operating businesses that they could maybe choose to push forward in different ways or dwindle. So how do you see this going?
Yeah, so you're right. Ryan Cohen was the founder of Chewy, which was essentially a dog and pet food company that it was like the Amazon of pet food delivery, right? And most people would look at that and say, well, why would you use Chewy? Why wouldn't you use Amazon? Why, how could Ryan Cohen possibly compete with a giant like Amazon? And the answer that Ryan Cohen saw was customer service and, basically like customer satisfaction, like fulfilling the customer's desires, treating the customer as well as you possibly can. And that's something that Amazon has obviously failed to do, and it's just become about the bottom line and margins and profitability for that company. And they even treat their own workers poorly. They have workhouses where people work 12-hour days standing on their feet and have 10-minute bathroom breaks every 3 hours or whatever. It's extremely difficult work. And Ryan Cohen said, I think there's a different way. I think people would be willing to pay just even a little bit more to have a personalized, more friendly retail experience than what they get on Amazon. And so he built Chewy into a $7 billion company. And now I think the market cap is actually up to $11 billion. And he sold his entire stake in Chewy in like 2015. And so he was a billionaire. He was wealthy. He could do whatever he wanted. And he kind of sat on his hands for a few years looking for a new opportunity. And again, his whole life and theology, or I guess, philosophy was structured around how can he fight against negative powers in this world. If you look at like his dad and the influence his dad had on him of instilling these virtues of hard work, proof of work, basically not cheating anybody, not lying, not scamming, putting other people first, being honest, forthwith, all those values were something that he wanted to continue on with his new venture. And when he eyed GameStop in 2020, he saw a company that was essentially down on its luck and being shattered by naked short selling, and he wanted to do something about it. And so that's why he started being an activist investor, buying a bunch of shares in the company, and then working to reinvent the company and to stop the bleeding that had been inflicted upon it for years. And his goal was really to again create a sound business that can actually outcompete the Amazons and the big box e-commerce companies, the Shopifys of this world. And I think again he's been at least marginally successful in doing that because he's stopped the bleeding for GameStop and made it debt free. So that's a success.
Yeah, he seems like he was, from what I heard, a very young entrepreneur. I don't even think he maybe went to college. Maybe he dropped out of high school. And he was making money and kind of wanted to pursue entrepreneurial things. I don't know if he's a video gamer. I don't know. I wonder, do you think they're going to do things beyond just, go after the bond market, maybe go after weaker capital, speculative attack the dollar, buy Bitcoin? Are they going to do things like maybe you can maybe pay for your games over Lightning, and maybe they become a Bitcoin bank? Do you see a much more maybe broader vision here for GameStop?
Yeah, I'm not sure, because the issue is GameStop has been extremely quiet and extremely tight-lipped around what their plan is exactly for this money and what their plan is in general with their Bitcoin acquisitions that they're going to do. My theory would be that yes, they're going to incorporate Bitcoin in more ways than just buying it as a treasury asset and doing the Sailor strategy or a modified version of the Sailor strategy on their balance sheet. I think there's multiple opportunities for like rewards points, for example, for redemption in Bitcoin. They're probably going to allow buying games and selling games in the store in Bitcoin. You can probably have buyable DLC and skins and add-ons that will be available to do on Lightning Network. And obviously they have a collectibles and basically like collection cards business that's actually pretty viable that they could also do in Bitcoin. And all those things could allow them to add more Bitcoin streams of revenue to their bottom line and allow them to stack Bitcoin even faster, which is, I think, a great move. They're very, very they're very, very tight-lipped and cautious because ever since the 2021 run-up, they've been threatened with lawsuit after lawsuit for basically, telegraphing or foreshadowing what their own moves are. And so because of that, Ryan Cohen himself, but also Larry Chang, right, other board members have been extremely cautious with their tweets and with what they say and not telegraphing or telling people what they're going to do ahead of time, because again, that could be construed as some form of market manipulation, especially when you have a retail investor base that's this large and this adamant about supporting the company. So I think whatever they're going to do it kind of like you're going to figure it out after the fact, not beforehand.
And what does 741 mean?
So 741 is just this weird again, this is all conspiracy kind of tinfoil, fun tinfoil for the GME community. But it's this number that has kept showing up in the GameStop filings, in the GameStop, investor base for the last 4 years, 5 years. So if you look at their some of their filings on the SEC page, their first numbers in the URL is 741. They've had they had a 4 for or 7 for 4 stock split. And they also had several different like filings that had a 741 figure like hidden in there somewhere. And they've also had obviously very important tweets that have gone out consistently at 741. And so, or 741. And so all of this had led people to believe that 741 is some significant number for the company, and that it's basically foreshadowing, some important date or some figure or some, entity or person that's going to be involved in GameStop in the future.
Interesting. I like the 7-for-1 stock split. Let's talk about gold a bit. I mean, there's so much going on right now, but it seems like gold is screaming at us. What's happening maybe in London at the Bank of England? What do you see going on in gold?
Your mission: build the blockchain, stack sats, and resist surveillance. You'll need strategy, stealth, and a little luck. Welcome to Blockhunters.
Built by Bitcoiners, backed by the community. Blockhunters learn Bitcoin by playing.
We played it at family night and everyone loved it. Finally, a game that gets Bitcoin.
Ready to orange pill the fun way? Head to blockhunters.com and use the code BTCMatrix for 10% off your order.
Yeah, the gold market is extremely chaotic, and there's been like essentially what I would call a liquidity crisis at the BOE and at the London Gold Pool building for the last 4 or 5 months. So starting in 2023 and then in 2024, we started to see more and more redemptions coming for physical gold out of Shanghai, out of the SGEI, which is the Chinese gold exchange. And that started putting a draw on Western markets for physical gold redemptions. And we saw the COMEX slowly being drained, as well as the LBMA being drained of the physical gold. But all of that went into overdrive just in January and February of this year, as net redemptions at the COMEX for January, for example, soared to 19,000 contracts, which, for reference, that's about 4 to 5 times the normal monthly, January redemption amount, and that equates to 1.9 million ounces of physical gold. So that amount of gold withdrawal meant that the COMEX panicked and had to find their own, gold elsewhere and refill their coffers, so to speak. Because again, one of the worst things that you can do for business as an exchange, especially as a gold exchange, is to actually run out of gold. Because suddenly now nobody wants to use you as an exchange because you just don't have any gold. So the COMEX started drawing in all their outstanding IOU or gold certificates that are gold IOUs at the LBMA. So that started draining London. And as these London vaults were being drained, the London gold banks, the brokers all started going to the Bank of England for more liquidity, because they said, hey, we've drawn down 20, 30, 40% of our gold supply. We're starting to get low. We need to have excess gold liquidity. And so they all started draining the Bank of England's own gold through their borrow program, and the lease rate for the Bank of England's gold, skyrocketed from where it is usually, which is like 25 basis points, to like 6%, 7%, which is the biggest percentage increase that they've ever had in history. And the wait times at the BOE extended to 6 to 8 weeks. So there was basically like a huge wait time for the amount of gold that these banks were requesting for physical delivery. We also saw a strain in the ETFs and even like gold stocks, where like the GLD ETF, for example, saw the borrow rate in the ETF. So basically the amount of money you pay to borrow shares of the ETF spike from like 1% to like 7 or 8%. And again, the reason why why these banks and hedge funds were doing that is because you can actually redeem if you're an authorized participant, which basically means if you're a bank, you can actually redeem the gold, the GLD shares, the ETF shares for physical gold. So what you can do is you can take those physical, you can borrow the shares, or you can buy them, and you can take them to, HSBC and JPM, which are the authorized, participants for the ETF, and you can redeem them for shares of physical gold for bars or for coins or whatever they have there. And so people were now draining the ETFs of their gold because they needed physical liquidity. And all this is to say that there's basically institutional gold demand reemerging as a major driving factor in the gold price for the next 2-3 years going forwards. And that's what's really driving the gold price higher. Because for decades, just like with GameStop, right, with the naked shorting, we've seen naked shorting essentially, or paper contracts in the gold market balloon to, the hundreds of times of the amount of gold that is in the vaults. So, the estimate is for London, for example, that there's 200 to 300 paper ounces of gold for every 1 physical ounce. In the US, it's not as extreme, but it's still bad, like 80 ounces of paper gold, 100 ounces of paper gold for every 1 ounce of physical gold. And that system works, right? As long as you don't actually request delivery, as long as nobody really wants the physical gold delivered on their doorstep. The minute that everybody wants their physical gold, this little game of hot potato, this little game of charades where everyone's just passing around, a single gold coin and 10 promises for it. Now suddenly everybody wants the gold coin. And that's what's happening. And that causes the paper markets, which is, the LBMA and the COMEX, to start to break and to rip the gold price upwards in order to compensate for that demand.
Yeah, right. It's very interesting watching gold. Maybe it's a canary in the coal mine. How does maybe the DXY falling? I think everyone gets excited for that, but how does that maybe strengthen the current system?
So that's a great question. Actually, I had a really good tweet about that today, and people have been DMing me, asking me, because I've said that a lot. Like, the irony is that the lower Dixie goes, the stronger the system gets. And people are like, what? That makes no sense. It's like, no, it actually makes perfect sense. Again, when you think about it, it's counterintuitive, but it makes sense. And the reason why is because the current system, the way it's structured, is that there's trillions and trillions of dollars of external dollar debts that are swirling around in the global debt markets. These are called euro dollars. So this is like a Pakistani bank making a loan to an Iranian oil supplier, or a Chinese commercial bank making a loan to a Japanese fishery. Like it's these kinds of transactions. But all these transactions are denominated in dollars. So these foreign banks are loaning dollars into existence and creating dollar loans. Now the problem is, now suddenly all these external, corporations, counterparties, entities, hedge funds, whatever, now they all have dollar debt they have to service. And since they're earning in their local currency, they have to go to the local foreign exchange market, transact those rupees or yen or yuan back into dollars, and then pay off their dollar debts. When the dollar system, or when the dollar or Dixie weakens, it makes it easier and cheaper for them to pay off their debt. That means that those entities, those fisheries, those mining companies, those oil suppliers will go out and borrow even more, because for one, interest rates probably at home are still relatively low, and for two, the dollar is weak comparatively. So it's a great time to borrow. And because, again, your incomes are artificially high because of this weaker dollar. Because of that, more and more dollar debt builds up in the system. More and more people are leveraged, and more people are highly leveraged. And that means that every time the dollar system starts to spike again, it causes more damage, and then the system demands even more liquidity to bail everybody out. But as long as the dollar remains weak, that actually encourages dollar borrowing, that encourages the creation of more debt, and that means that, again, future demand for dollars grows. Because in a system where money is loaned into existence, the more money you loan into existence, the more demand you create for that future dollar.
Very interesting. And yeah, the euro dollar market is probably huge. I wonder if stable coins gives, sort of the Fed a little bit more ability to rein that in. Do you think that right now with the trade wars, the currency wars, it seems like tariffs, it seems like, and I want to talk a little bit about Trump and maybe your take there, but well, let's start maybe with Trump. What if Trump just decides to announce tariffs and cancel them randomly for like the next quarter? What do you make of that approach, or what this could do?
So that's kind of this like chaotic, tariff or trade policy that would honestly be emblematic and would probably be an echo of the BOJ's own, crazy monetary policy of raising rates and increasing yield curve control, but still running QE. What Trump is trying to do is shake out the global trade network and figure out who is amenable to his position and who is not, right? So first, by raising tariffs, he basically used the stick approach and said, you guys all better come to the table to negotiate and to lower your tariffs or to basically get rid of your unfair trade practices you have with the U.S. And then by canceling and pausing everything, he was basically, seeing which ones had, at the end of it had come to the table and were ready to talk, and which ones were still stubbornly resisting him, like China. So that's I guess the pro-optimistic view on what he's doing. The pessimistic view, obviously, is that he raised these tariffs and he wanted to start essentially a global trade war against the global community. And this started causing massive stress in not only the U.S. Treasury, but also the U.S. equity markets, as well as especially global equity markets and global bond markets. We saw the 20-year rise to almost or to above 5%, the 30-year at 4.998. We saw a credit spread start to blow out. We saw the yield curve, the 10 2-year yield curve, start to uninvert at the fastest pace since before COVID. And overall, the system started melting down. Nikkei was down like 10%. The Shanghai Composite was down 12%, 15% at one point. And global stock markets were starting to sell off hard, and the contraction was beginning. And it was because of this, aforementioned effect of excessive debt in the system, creating a liquidity dependent system that needs constant inflows of new cash to stay running. And once you threaten that cash, once you threaten tariffs, once you threaten restrictive economic or trade policy, that starts to send the whole system crumbling down. And so Trump had to panic and acquiesce and say, okay, there's a 90-day pause on tariffs. We're not going to go as hard as we wanted to, because there was just too much chaos in the global system. So those are the two, I would say, takes on this recent action.
So during COVID, and I'm not saying definitively one or the other, but it seemed like governments acted somewhat or in complete concert, from lockdowns to money printing. And there's different conspiracy theories. I've even heard now Trump's angry at China because they ruined his first presidency with COVID, and maybe they weren't working in concert. But do you think there's any chance that the United States and China and all the central banking countries are working together in concert now to devalue their currencies and to print, and they need sort of like a currency war in public to do so, right? Like Trump announces a tariff. He's trying to push the Federal Reserve maybe to lower rates. And the Chinese government said, hey, we're going to respond in kind. We're going to have to take a hit. We're going to have to print so that you guys don't take the full hit of the tariffs we're going to have to do in kind and, fight back. And all the fighting leads to the benefit of them all getting to print. Do you think there's a possibility they're kind of working together?
Yeah, there could be. There's this issue of global, basically a global sovereign debt crisis, where it's not only the U.S. or Japan, but it's basically every single sovereign is facing a debt and fiscal situation that's worsening by the minute. And so when you have a world that's kind of on the same clock, kind of on the same path and trajectory in terms of debt, it's not inconceivable that they could be, trying to work together to devalue and to weaken their currencies in order to stave off deflationary collapse. Now, the actual practicality of that is much more difficult to do, right? If you're Japan and you devalue first, right? Let's say you let the yen blow out to 200 or 250 to the dollar, then you receive a a boost in exports. You receive a growth of economic activity that you wouldn't otherwise see if everyone else was devaluing at the same time. So it's kind of like a beggar thy neighbor strategy of whoever devalues first wins, at least in their eyes, right? Wins as in gets some stimulated nominal growth and gets inflation and gets to deal with their debt situation faster than the other people. But I think functionally that's just too hard to pull off. So I see this as each nation kind of thinking of it for themselves and trying to, position themselves so that they can continue to receive favorable economic treatment from the U.S. And the U.S., Trump, ostensibly at least, is trying to do his protectionist trade measures, which he promised in his campaign for the middle class, Midwestern, median American, Rust Belt, factory worker. He wants to ensure that they don't lose their jobs and that maybe even that the jobs come back and their ability to produce and to manufacture here in the U.S. is returned.
We'll see. What is the TINA doctrine?
Tina, there is no alternative. So this again, it relates to dollar milkshake theory or dollar endgame theory. The problem with a global reserve currency is that it's the king daddy of all network effects, right? It's kind of like a language or even a social network. Creating a competitor to Facebook or a competitor to Twitter, as they currently exist, and as we've seen with Blue Sky and Threads and all these things, it's not very feasible, especially on the large side, like getting a large amount of people to actually adopt it. And the same is true of a global reserve currency. When you have a current incumbent system like the dollar, which is already entrenched, which already has a ton of proponents, which already has a ton of usage, which already has a ton of dollar debt that has inbuilt demand for dollars in the future, then moving off of that system is very, very difficult. And any other fiat has the same systemic issues that the dollar has, right? If you're the British pound, if you're the Canadian dollar, if you're even the Chinese yuan or the Russian ruble or the Indian rupee, and you say, oh, well, I want my currency to be the global reserve currency. Well, basically every single country has high debt to GDP. Every single country has worsening demographics. Every single country has seen slow or stagnant growth for the last 10 years. And every single country doesn't have the network effect of external demand for the dollar that the U.S. already has. So that creates a situation where there's not really an alternative, a fiat alternative, I should caveat. There's no fiat alternative to the dollar system because the dollar system is just, too strong and too entrenched to be displaced by another fiat. Now, there could be a situation, obviously, like we've said, where Bitcoin can become the new global reserve currency, and then that is used to settle international trade, and then that international trade, basically builds up Bitcoin balances between nations, and then those nations can use it if they want to actually use as money, even internally within their borders. But that's a much, much grander vision, and that's, I think, actually the conclusion of dollar endgame is that's how you actually finally kill the dollar system, is by adopting a completely new global reserve currency that's completely disconnected and not reliant on the old fiat dollar system.
Okay, we're going to touch on that in a second. We're going to round out here, though, with a little bit of rapid fire. What do you make of Warren Buffett sitting on $300 billion in cash right now?
That was a brilliant move by him. I mean, he sold essentially the top and sat on cash and just earned interest on it. And I think he's waiting for maybe a more severe pull down, or maybe he's already started accumulating some shares of some of the companies he wants. But I think ultimately it also represents a lack of decision, or maybe an amount of indecision that he has around his next financial investment, right? What's the next company to buy it? The reason why is because there's not really any good deals anymore, right? Everything's expensive, especially in the U.S. And there's not really any reason to invest outside of the U.S. because every single country, like we said, has all the problems the U.S. has and more, and doesn't have external demand for their currency or their assets. So I think he's just waiting to find a good opportunity, and I hope that he goes down the rabbit hole far enough to lead him to Bitcoin. But it's really hard for him because his generation is so old. I think they're the silent generation, like even before the baby boomers, because I think he was born in the 30s. They're so entrenched in their ways and so old school in their thinking that I think it's going to be difficult for them to adopt Bitcoin in any meaningful way.
My strongly held opinion, my strong opinion held loosely without any research, because I grew up a Warren Buffett fan, but I would say, maybe over the last 20 years, he's probably a mid-range hedge fund manager or mutual fund manager at best, if you look at his results. I said that to James Lavish. He Googled the chart. He said, "No, man, like he's been solid." Lynn Alden just put up a tweet or a post the other day that kind of made him look like a mid. I do think if I remember correctly, he came to Apple late, the internet and electronics and tech late, but I think it was a great move from then. He could still come to Bitcoin late. There are early video and sort of moments where he seemed to get Bitcoin quite early on, him and Bill Gates, before they changed their tune, maybe thinking about their Bank of America shares. To round it out, who is Weston Nakamura? You were just in Japan.
Yeah, Weston is a macro writer, a commentator, an expert on the Bank of Japan, and he was one of the main features of several podcasts I recorded there, but also of the interviews and the documentary that we did down there. And he was one of the main experts we consulted and asked about, the Japanese economy, Japanese financial and economic situation. And I highly recommend everyone go out and check out his work as well if you're interested in learning more about the Bank of Japan.
Well, we'll learn more when your doc comes out. Roaring Kitty, I mean, is he going to make a comeback, an appearance? Is he going to become a Bitcoiner? Is he Satoshi? What's going on? Who's Roaring Kitty? What's going on here?
Sure. So Roaring Kitty is the moniker used by Keith Gill, who's a retail trader and investor in 2020, who started, actually in 2019, he started buying GameStop shares and options, and then he doubled down essentially in 2020 and made, at the height, like $48 million during the GameStop initial squeeze on GameStop. And he famously did not sell his shares he sold his options, but he used the money to exercise and buy more shares. Did not sell his shares and did not lower his position even during the huge drawdown. So he's kind of entered a legend status in the community where everyone just kind of views him as this like godlike figure with balls of steel and hands of diamonds that doesn't care about price action for his asset. So Roaring Kitty returned in May and June of 2024 with a mass flurry of tweets, and the stock price subsequently started to run extremely, extremely hard. He also was buying 20 million share equivalent worth of options, and he also returned mysteriously with a portfolio that was worth over $260 million. So somehow during the last 4 years, he 5x'd his portfolio, we think by selling options, covered calls, and cash secured puts on the shares that he already had. But in any regard, Roaring Kitty had basically done his homework. He has a CFA. He used to work at Mass Mutual as a financial advisor. He's intelligent. He's well researched. He knows what he's doing, and he basically was able to transfer his investing knowledge in stocks into a massive long GameStop position that obviously paid off for him very, very well. And so he's only tweeted once, I think, in the last 4 months, but his last tweet was, or at least the last tweet that I can recall, was a Time magazine cover, and the number 420 was on it. And of course, that's a meme number with smoking weed, but also 420 is April 20th, and that's coming up here in 5 days. So there's some tinfoil that he's going to start tweeting again here in the next week or so, actually.
He's like the Banksy of equities. You know, there's sort of like an artistic, mysterious part of the whole thing with him. I think you said on Walker's fantastic podcast, you can't expect life-altering change from a system that depends on this kind of grotesque parasitism to survive. Really what we need is just complete reform of the entire financial system. And that starts with Bitcoin. That starts with the money. On your Substack, I believe it says, "Wake up, Neo, follow the white rabbit." You said, something earlier around, like, if we're going to kill the dollar, the dollar endgame, it's going to play out a little bit like this. So maybe we'll end on two questions there. do you think the dollar is going to die? And what kind of time frame would you put on that, even in maybe broad terms? My opinion has really changed on it, especially this last maybe even 4 months.
Really? Why is your opinion changed? Has it shortened or lengthened?
Lengthened a lot. And I used to see a faster death. I think that Bitcoin still ascends to infinity, but I see a much longer road ahead for the dollar through stable coins and the Bitcoin dollar. I'm just trying to grok that. So I'd love to hear your take.
That's actually what I would agree with. The way that the current monetary system is structured is that all other fiats will fail first before the dollar finally fails. And actually, ironically, the dollar strengthening is a sign of stress in the system, not a sign of, American ingenuity or American innovation or American exceptionalism. So the longer the system goes on, like we said, and the weaker the dollar gets, the stronger it gets. And the longer the system goes on, in general, even with the dollar index staying flat, the more debt is created. Again, because every single year, you have, like, let's just put numbers on it. Let's say there's $10 trillion of dollar debt outstanding, and that's rated at 5%. Well, to pay off all that debt, you now need 5% more dollars the next year to pay that off. And those dollars mostly are loaned into existence by the banks. And so now in the next calendar year, you have $100.5 trillion of debt. And so, again, you can see at these fiat systems, as this time goes on, the debt just builds and builds and builds and builds and builds and builds. And it just does not stop until there's a major event, like a major war, a devaluation, a hyperinflation, a deflation, a default, something to completely reset the system. And the way the global monetary system is structured means that all these other regional fiats will collapse first and harder and basically lose their energy and purchasing power into the dollar before the dollar does finally die. Now, the dollar, of course, will die eventually, because we're talking about an entity that is fighting the financial gravity of ever-increasing debt and ever-increasing QE in order to just stay alive and keep the wheels on the bus. And so eventually that ends in disaster. But the point is, it ends for the dollar. The dollar is the last man standing in this game. And so of all the currencies to be bearish on, the dollar is the worst one to be bearish on for the duration of this system. Now, with regards to actual timeline, again, I would say I would take the over, like 10 to 15 years for the dollar system to really start dying. You have to see major signposts like, the yen collapsing, the yuan collapsing, currency crisis throughout Latin America, and dollarization of more countries, basically making more countries like El Salvador or Panama adopting the dollar as a currency and getting rid of their own. You have to see that becoming much more commonplace before you start, thinking that we're actually towards the end of this end game. We're still in the middle, I would say the middle chapters.
Very interesting. Probably the earliest of innings. My highly regarded take, because I think I think whatever I think is gonna be wrong, I can't be right. I will not guess the actual, especially in the short term, real timeline. But what I think is gonna happen, maybe just in the moment. My take now is the dollar dies in 2140, or somewhere in the lead up to that, as Satoshis run out, newly minted Satoshis run out. That's I'll go my bull-tard take on Bitcoin is I'm gonna go with 1.3 million by April 2026. A little extended cycle there, and a true 2017 play towards the middle to the back end of 2017 and continuing on. And maybe we don't have 4-year cycles after that. But again, that's not financial advice. That's probably do the opposite. It's like a Kramer. I'm like an inverse signal. But what do you? Let's just wrap it up with Bitcoin. Is Bitcoin going to be a major inflection point this year with sort of strategic reserves in the U.S. is like, or is this sort of like very early on and it's going to take a few more years, or even a decade or two, for a lot of these things, for Bitcoin to really move into more mainstream macroeconomics from a central banking point of view, or or that they'd have to react at a really high level this year, or they're going to come out stacking or something? How do you see 2025 for Bitcoin?
Yeah, I think that this is going to be a very tumultuous year, and it's already proven to be that way. And the reason why, again, is because there's so many macro factors that are driving in different directions for Bitcoin. We have the end of, the excess reverse repo and the TGA facilities and the BTFP, which were being used as excess liquidity for the financial system in the wake of the QT programs enacted by the Fed. We have, obviously a recession appearing around the corner and potential, wave of defaults and loss of investor and of consumer confidence in the economy and the markets. But we also have a potential easing cycle upon us, right? With the Fed starting to cut rates and Trump pressuring Powell to cut faster and to potentially even restart QE. And it's important to note, right? We've never had in the last 15 years. We've never had an easing cycle in which, or I should say a cutting cycle in which there was no quantitative easing. So if you take that into account, even though obviously cutting rates doesn't mean QE immediately, it always means QE eventually. And so if that's the case, then this cutting cycle, if it ends at 1% or ends at 0, wherever we end up with the terminal rate, it's going to mean that there's probably going to be QE attached to that. And QE is always bullish for Bitcoin, for gold, and for risk assets in general. So I would expect, essentially like the worse the middle of the year gets, the better the end of the year is, because the more crisis that gets caused and sparked by Trump and the trade war and banking panics and what have you will cause more QE in the end, and QE will pump up asset prices, but specifically Bitcoin, because of its sensitivity to global liquidity and Fed liquidity so tightly.
Yeah, I mean, the first half of the year is shaping up to be nothing like I thought it would be. Probably the same for the second half of the year and maybe the rest of the decade, but it's going to be a wild ride. Maybe Bitcoin will be every day, every 84K for the rest of the decade, and we'll have a real stable coin there. At least one Bitcoin equals one Bitcoin, and that's something we can count on. Peruvian Bull, you're a fountain of knowledge. I love talking to you. We'll have to have you back soon. This has been so dope. I'll leave it to you for any parting words and let people know where they can find you and your work.
Sure. Yeah. Thanks for having me on, Cedric. It's been a pleasure. It's been too long. We definitely need to do these a little bit more often. I have a Twitter account at Peruvian_Bull, and in the bio you can find my my links. I have a Substack. I have a YouTube channel. I also have a book, Endgame, if you want to buy it on Amazon. That's also available for free on my website or on just Reddit or Medium. If you look for Endgame Reddit, it'll pop up. There's also a Nostr account, and the NPub is linked in my extended bio. Again, if you click that little extended bio, see more, the Nostr will pop up, and you'll see my my Nostr account there. And I try to publish there every couple of days. Not as active as Twitter, but I'm active on there as well. So you can find me on all the socials and follow me.
Very cool. Hope to see you in Vegas.
Awesome. I'll see you there.
Thanks for tuning in to this episode of the Bitcoin Matrix. If you enjoyed the conversation, don't forget to like, subscribe, and drop a comment below with any questions or thoughts you may have. We'd love to hear from you. You can support the show by checking out our sponsors and affiliate links in the description. It helps keep bringing you great content while connecting you with awesome products that I believe in. Share this episodes with your friends, family, or anyone curious about Bitcoin. And let's keep growing this community together. Stay curious, keep stacking, and I'll catch you in the next one.